because we're going to take a look at the broad macro picture first. I mean, Nigeria's MPC was expected to leave rates unchanged yesterday, broadly in line with expectations, but there have been other measures taken to boost liquidity into the system. What have you made of that overall announcement?
Well, as you indicated, it was largely in line with expectation. The the interesting thing is that the MPC continues to talk about very similar to the South African MPC, talks about the fragility of the economic recovery. That's interesting because they just spoke about third quarter provisional estimates of third quarter GDP of 7.5%. Which for us, of course, would be something completely different. But they also talk about the tentative recovery globally, but the benefits are starting to come through. That said, they then focus on the other side on what is a lack of growth in credit and money supply, and they say this is where a problem sits, and they start to talk about quantitative easing coming into the system, and this bringing it back to the asset management companies then, where they, for the first time, we're starting to see some detail of what they mean by that, and he's talking about bringing 500 billion naira, pumping that into the system in which they absorb these bad assets out of the banking system, and that would then take the form of quantitative easing. So they're still worried about that. There's not enough liquidity being provided to the economy, despite the relatively good growth numbers.
And that, of course, hindering their growth prospects moving forward. So a lot of concern and a lot of emphasis being placed on growth at the moment. But at the same time, I mean, the banks reiterated that government's plans to abolish fuel subsidies posed a major inflationary risk in the country as well. So what's your outlook on that front?
Well, the short-term outlook is relatively positive, and I agree with the remarks made in the statement where they speak about the outlook for agricultural production is good, inflation is on a declining trend, and even with this quantitative easing, I mean, we've already seen a lot of money being pumped into the banks to support the banks. What we've seen is that money supply growth is relatively low by African standards, even if it is increasing. So that by itself is not a huge problem. Incidentally, interestingly enough, they quote the numbers for September as a growth of 5%. That's down from the August number, but when you project it forward to October, we probably should see quite a strong bounce in money supply growth in October. But either way, it's still at relatively low levels. So at the end of the day, they still feel the need that there's a confidence problem in the system, and they still feel the correct approach is to throw cheap money at the problem and to allow that to sort of oil the economy.
Well, while there's all of this activity happening in the broader context, there's a lot happening within the market space as well. So let's bring Samuel Chidoka, who's, of course, as I said, Vice President at Dunn Loren Merrifield, into this discussion here. I mean, of course, Samuel, it's in this context that we've seen a slew of results filtered through to the marketplace yesterday. The numbers out of the banking sector has been stealing a lot of attention, and First Bank was top amongst those yesterday. The market clearly not impressed with the numbers. What did you make of them?
Well, you would understand the market's reaction to the numbers. Generally, what we have noticed is that the market has been very cautious with the numbers coming out from the banking industry. If you look at the numbers critically, you will find out that gross profits actually went up for the bank. But what we experienced was that in line with the recent drive of the central bank for banks to make full provisionings, underpinned by the recent investigation of the central bank of the banks in Nigeria, First Bank has had to come forward with their own provisionings also, and that reduced significantly the net profits that we see coming out from the bank. We would expect that until the banks have fully made provisions for the toxic assets in their books, the market will not be very impressed with the numbers coming out from the banking industry.
Well, we had Leon touching on the fact that we did have the Central Bank of Nigeria emphasize its promotion of the creation of the asset management company. The executive arm of government is said to be frustrating, though, the formation of that much talked about AMC being promoted by the CBN. So what are you making of the developments we're seeing in that regard?
Well, as regards the decision to have the AMC, I think is a step in the right direction. And we think that for the banking industry to generally recover from what we have experienced in the recent past, there is a need to deal with the overhang of the toxic assets that we have in the banking industry. Now, the asset management company will be a step in the right direction to removing those assets from the books of the banks and managing them in a different company. But the issues with the asset management company has to do with the legislation. What the central bank will require is that the Federal House of Representatives and the Senate of Nigeria would need to pass a bill that empowers them to set up the asset management company. Now, that in its sense is easier said than done. Knowing the pace at which bills are passed at the legislature, it will be something that most likely will not happen this year. Bearing in mind also that the Nigerian budget is currently at the legislature, and the petroleum industry bill is also being looked upon amongst other bills that they have been looking at right now. So we think that is a step in the right direction, but the two critical issues, the modalities for transfer of the assets and then the legislation for setting up the asset management company.
Leon, let's just get more of your view on this asset management company, because as you said, I mean, the hope is that such a company will allow banks to clean up their balance sheets and then free funds to actually oil the economy once again. But what's your view on the impact it's going to have? Is it better than the CBN coming forward with a direct capital injection, a direct bailout package of the banking industry?
Well, yeah, I would think it is probably an improvement, because what it will do is add transparency into the process, and this has been one of the big drives that Governor Sanusi has been working on, is to, to put up on the table, what are the bad debts, what's the provisioning, what is the actual situation in the banking sector, and this is a fantastic way of identifying problem assets, taking it out, putting it up into the public platform, and we know, importantly, that it's out of the banking sector, and that in that sense should help restore a lot of confidence back into the banking sector. So I think it is a good move.
Yeah, well, Samuel, I mean, the tier 2 banks such as Access, Fidelity Bank, Diamond, FCMB, Stanbic IBTC as well are expected to take advantage of the current market environment, actually buy scale and position their businesses for leadership positions moving forward. Do you see activity picking up with regards to M&A activity within the banking sector? Because recently it's been very quiet when it comes to investors showing interest in buying stakes in these troubled assets.
Well, it's not been quiet. The truth of the matter is that from what we hear, there have been some due diligence going on right now in some of the banks that have been, if I use the word, the troubled banks. There have been some due diligence going on right now, and we believe that the tier 2 banks are positioning themselves to take advantage of this. What that would do invariably for any tier 2 bank in taking over any of the banks, any of the 8 banks that are troubled, is I will position them into basically a tier 1 bank. And it would be a step in the right direction for them to do. The question though is, do they have the capacity? How many of the tier 2 banks have the capacity to take over some of these banks? Because even at today's valuation for these banks, it will still quite cost a bit of money for them to be able to acquire a significant stake in this bank. But one of the banks that we're looking at very closely, that we know that has a capacity and has been working towards acquiring one of the troubled banks, will be Stanbic IBTC. And we're watching to see how this will play out. But we do know that on the ground, there's been some due diligence going on in some of those banks right now. And very soon, the M&A activities would kick up.